Alrighty, ladies and gentlemen, lock in. We have a lot to go over. While everyone are far too preoccupied with all sorts of geopolitical noise, they are missing out and not paying attention to what's really going on. Of course, as always, in today's video, we're going to go over the S&P, the major indices, which shows us directionality of where the broader market is headed. But before we do that, let's go over, as we have roughly about an hour and 10 minutes-ish before the end of the session, let's go over real quick over oil so we can see where oil is headed. So as you can see, and I already gave a remark on the previous sessions, we're going to again try and keep it simple. You guys, first of all, those who don't know, we use momentum to understand where the market is headed. You have a layout right above me. Use this to figure out the directionality. Of course, I will be explaining as we go. We're going to try and keep it simple so everyone can understand. Of course, the overall perception here that most people don't realize is that we are not really moving within, or rather revolving around, a single support or resistance level. We are actually revolving around a set of levels, channels, ranges, if you will. Currently, the center range is, as you can see on the screen, and I've highlighted this before many times, this range, that 99.59 and 95.08. This is the center range, which we can see the price action revolving around quite accurately, and we've seen these levels come into play and being respected many times, so we know them, they are definitely where they are located. You can see kind of on a smaller time frame a little bit of respect and appreciation of these levels, acknowledgement, if you will. In reality, what we're seeing right now more than anything is a sideways price action with a lot of volatility. Now, where are we headed then on a broader spectrum of things? So, ladies and gentlemen, follow this. Yes, as you can see on my chart, I've highlighted a couple of levels, the 78.96 or 118, which basically you can call it 120. When we're gonna test that 118, it's not all that weird if we test 120, which kind of is highlighted right above it. There is always some slippage on both ends of the channel, or the broader channel. And so, as you can tell right now, my indication is that we are potentially going to see a movement downwards, although again we can see that we're still hovering around the $100 range right now, which is highly elevated, and cutting into smaller companies' profit margins, who have them razor thin anyways, which hurts them, and of course they can survive for, yay long, if you will. And we understand that the market is basically almost in a tsunami-like state, where you see the water receding before it actually hits the shore. So those who are familiar with what's going on will start running. Those who don't understand get all excited and run towards the receding water. That would be a major mistake. Why? Simply because if you are not familiar with what's going on and you cannot recognize the signs and the signals, as always, you will not be afraid nor warranted. And that's why in a couple of weeks, or a week from now, when the market will be seeing a broader, more significant movement downwards, you'll see everybody's panicking. Why? Because they will always say what they always say. Oh, why didn't the market tell me nor signal? No, in fact, the market is yelling, as always, and screaming at you that it's going to do one thing or another, in fact, ahead of time. Now let's pay attention to what's going on here. So on the hourly, it appears that we are more so headed towards the bottom of the channel, subsequently retesting these 99 and 95 levels, which were so adjacent to. On the hourly, we're now again also moving downwards, and thus we will be testing the bottom of that channel potentially. That definitely is a clear indication of a retest of that bottom level, potentially moving into that wedge right here. The daily, by the way, here, this is where we start to see more so bullish momentum. The trick with this is, why do I say bullish? Those who are not seeing what I'm referring to this thing right here on the bottom, how we have a transition, and now we have our K, our green line that represents the shorter, the faster moving average of the current price action. And so thus it appears to be that we are moving from side to side of the channel, basically from one end of the channel to the other, in a sideways price action along this center channel, but with high volatility. And that means we can exceed and even see the price action go out and go as high as 118, 120, as we said, or potentially 78, 80 ish, that entire range in between. We do have certain support resistance levels we're familiar with, such as 87, but those are the major ones, right? So if we pay attention closely, what we see here is that we're closing on testing that bottom range of the channel, a potential another sort of growing bullish momentum, which arguably this is not the end of all things, and we still will see a crossover again and again. On the weekly, as we can see, we are still not yet full on bullish. We're still on that crossover transitioning sort of phase. Once it's done, it's far more likely to see that bullish momentum start playing in, and of course then we will see a retest of that 118, 120. Now, that is on the weekly, which means we're now potentially looking into next week. Why? Because this week we haven't yet seen a crossover, and maybe even 2 weeks from now. So that appears to be playing into something else that currently is sort of in the build-up stages, if you will. On the monthly, on the other hand, we are more so bearish, but in bullish territory. That means we are now currently retesting that 99/100 levels, as you've seen, which is highly elevated and very, very, very unpleasant for the broader market, for us all at the gasoline station, at the gas station, at the pump station. It's really painful. That's why right now you're seeing highly elevated prices. Arguably, it's a little bit more complicated because, as you know, some of us don't even use all that much oil that comes through from the Strait of Hormuz. But that's the reality, especially Americans. Americans really are exposed only maybe 10 to 15, maybe 20% at the height of it all to oil that comes from Iran, from the Strait of Hormuz. America has its own pumps, its own infrastructure for it. It's Venezuela now, and so on and so on. So, it's kind of redundant to even try and explain how these come together, because there's a lot more of a sophisticated system at play here. Now, those who do want to know, I highly recommend you join my community, where I, of course, go in depth and explain technical analysis, whether it's harmonic patterns, momentum, the cyclicality, all of it, and then some. Of course, with the signing up for the Academy, you also get a lifetime membership and all sorts of wonderful things, although that's kind of about to change. So hurry up, sign up, and lock in the conditions I'm offering right now, which, by the way, are highly discounted as well. Now let's transition to the S&P. So where are we at with regards to the broader market? Everybody's panicking and going bananas, but now really I want you to pay attention to the major levels we really are revolving around. Right now we really are at the height of testing 7,384.45, and you know what, we of course can pay attention to the smaller time frame, which don't play a major role, but let's pay attention to the 45 minutes. Kind of, this is where we're going to start. 45 minutes is very indicative that we're gonna go back. We're now already seeing a transition and a turnaround and a reversal into more so bearish pressure. Once we become more bearish, we will see a retest of that major level, 7,384. Of course, by the way, it's very important to notice that in my community, this is my Discord, of course, this is the Academy area that I was just mentioning. The Academy is now highly discounted, so I recommend you lock in that price, that 4,500, because it's now on a 55% discount. Yes, it's a highly valuable, literally kind of holy grail sort of system. As you can see, those are the reviews. You can of course pause the video and read these reviews of my students who already graduated, with whom we just had a wonderful session covering SQQQ, which is an inverted position to the QQQ, or inverted rather to the TQQQ. Basically, if the market goes down, I benefit, profit significantly, because it is triple levered, and that means I for every dollar the market the Nasdaq drops, I make 3. Pretty simple. Of course, I don't advocate nor recommend that position, but that is the position I'm holding. So yes, about the charts themselves, I was regarding the actual price action and the expectation earlier throughout the day. As you can see, before we even filled in the gap earlier today, the gap resides kind of around here. So as you can see, we were still at 7,373. I was indicating that we're going to have a closure of the gap. So now it looks like next week or end of this week we will have a far more bearish pressure, just as I was trying to describe to all of So why what so don't, I probably wanted to say, so don't say later you didn't know. Yeah, I kind of messed up this one, but you get the idea. I was indicating that before we filled in that gap, how we're of course seeing for example is this, as we will see the day chart break, it will spill over and the week setup into the weekly setup. I want to say weekly, not week, but weekly setup, and that will become more bearish, and so the price will collapse, indicating that, by the way, as you can see, I was indicating that that gap will be filled in, as you can see right there, and then that gap got filled in, as we're saying that that market will be moving towards the gap. Kind of I was saying here almost, right, as you can see. So my members were more than prepared for everything. And yeah, as you guys can see, that is a highly valuable community where I talk to my members on a daily basis. Shout out to CoffeeZilla, by the way. And yeah, we are, as you can see, in fact, just yesterday and the other days, we're talking all the time about everything that's in the news cycle. Yes, Michael Burry, by the way, is expecting a major bubble burst, similar to 99 or 2000s, as we are now coming into a major end of a cycle. Of course, there are Charting 101, my portfolio, options discussions, and all sorts of wonderful things. I highly recommend you join the community while it's still discounted. On that topic, by the way, here it is. Lock in these prices before they change. Here now, you have finally corrected, and you can actually see what portion of the Discord will be opened for you based on the subscription. Of course, you can make it even cheaper by changing this little ticker and paying annually. It'll be even cheaper for you. So let's go back to the chart. So on a 45 minutes, as we said, we are looking now to a downwards buildup of a sort of change transition. As you can see right here on the hourly, we are not there yet, but we're about to get there. We're about to become a little bit more bearish than bullish. On the 4-hourly, of course, we're having a little bit of a retest, kind of a stalling momentum, similar to what we're seeing on the geopolitical scene, right? A ceasefire temporarily, but in reality, what we're seeing here is just a little bit of stalling and a retest of that sort of major center level that transitioned from bullish to bearish. As you can see right above me, a breakdown of how the stochastic RSI functions, and as you can see right here, we are now moving in bullish territory. We're riding high, we're riding high, but we're about to cross over. Now, why do we think we're about to cross over? Because the weekly is basically 1 millimeter away from crossing over. It's just about to do so. So since this is weekly, this is why I've been warning my students, my members in the community, to follow the weekly momentum. And once the weekly momentum breaks down, spills over, basically, this is where we're going to see this whole setup break and collapse below the 7,384 and transition into a bearish cycle. As we see in the monthly, we already are on the way into more so bearish price action. Oftentimes, what people don't realize, the market is almost like this a big tanker, and it takes quite a while because its turn radius is not as small as a little dinghy, a little boat. Basically, it takes a while. So what we're seeing is, although we're not fully in that didn't fully yet transition, but we are transitioning. As we've seen before, I warned about these things. In fact, some of you know, while we're still moving sideways, I already warned about a downwards correction and in fact an upwards one. This one ended up being slightly more higher than expected, and yet it doesn't change anything about the overall structure. In fact, if you zoom out and you realize what you're really looking at, you're going to realize that you're looking at a head and shoulders setup on a broader, sort of larger setup right here. As you can see this, right, that's the head, and we're about to have a neckline and a breakdown again, retesting these blue lines that I already mentioned before. You've seen them come into play before. I know it looks all very noisy, very difficult to understand what I'm referring to, but those of you who are more sharp-eyed notice these blue lines or are familiar with. Those are a very strong set of support resistance levels we've seen play out, in fact, right here and right here before. So we expect them to play out on the neckline downwards. Later, don't say you were not warned. The tsunami that is incoming right now is making the sea, the water, the market sort of behave in this bullish nature. Well, that is just merely actually a preparation. That is the receding sea before the tsunami actually hits. That's it, ladies and gents. Don't say you were not warned. I know those of you who are expecting more so bearish price action are surprised by this. I'm not so much. I understand why the cyclicality may exceed these highs at times. This is again a side effect of the larger cycle, simply because we're coming to an end of a 100-year cycle. There's a little bit more volatility and a little bit more standard deviation to the overall structure. On the grand scheme of things, it does not change anything, and we're just getting started with a far larger, very, very painful bearish cycle. This is the beginning signs of it, which people are absolutely blind to. And this is very sad. Why? Because just in a couple of months from here, people will be crying, oh, how come I didn't, well, given how the market moves also very rapidly, in a couple of weeks from now, people will be crying, oh, why didn't I see that coming, or why didn't the market warn me or tell me, or whatever. The market did. You just didn't know the language to understand that it's saying and what it's trying to tell you. That's why I highly recommend join the community. Look in these low prices right now and definitely become knowledgeable and understanding of why these things happen and how the warning signs look like, so you don't miss out on them. They happen all the time. The market is literally signaling on a daily basis what it's about to do. There's a next step, of course, but people don't know how to understand the language, and so how can you read what it's about to do if you don't understand what it's trying to tell you? That's it, ladies and gents. I hope you got some valuable information out of this. Join our community. Welcome to all our new members, by the way. Don't stay in limbo for too long. Don't forget to follow all the instructions on the Discord so you are not stuck in limbo right there. Follow the instructions. There are plenty of instructions right here in this. If you want to sign up for the Academy, don't forget to click this button, the Academy application, or if you need any support helping out with actually joining the Discord and so on and so on, although you have all the links and all the instructions right here. In fact, a video that explains to you how to do so. That's it, ladies and gents. I'll see you on the next one. I hope you all have a wonderful evening, and yeah, see you tomorrow, hopefully, as I'm gonna be feeling better. And yeah, I know you probably noticed I sound a little bit funky, but yeah, well, funny or whatever. This is a side effect of the dental procedures I have had done, and that's why I didn't appear on camera for the last couple of calls. But yes, guys, as days go by, I'll probably feel better, and I'll probably stop sounding funny the way I do right now. And yeah, that's it. I hope I'll see you all in the community. You all have a wonderful evening. Bye bye for now.